What if we could redesign money? What if we could create a system free from central control? A system built on mathematics and open to all? This is not a hypothetical question. This is the promise of Bitcoin. In 2008, a mysterious figure, or perhaps a group, using the pseudonym Satoshi Nakamoto, released a white paper that would change the world. This paper, titled Bitcoin, a peer-to-peer electronic cash system, laid the foundation for a new kind of money. Bitcoin is more than just a digital currency. It represents a fundamental shift in how we think about and interact with money. It is a decentralized, transparent, and secure system, powered by cryptography and driven by a global community of users. This essay will explore the history of Bitcoin, its impact on the global economy, and its potential to reshape the future of finance. Join us as we delve into the fascinating world of Bitcoin, from its humble beginnings to its current status as a global phenomenon. The story of Bitcoin begins in the shadow of a global financial crisis. In 2008, the world watched as banks and financial institutions crumbled, victims of their own reckless practices. Trust in the traditional financial system was shattered. It was in this climate of uncertainty and distrust that Bitcoin emerged. Satoshi Nakamoto's white paper offered a radical alternative, a decentralized digital currency, free from government control and immune to the manipulation that had brought the world to the brink of economic collapse. Bitcoin's timing was no coincidence. The 2008 financial crisis exposed the inherent flaws in a system where power and control are concentrated in the hands of a few. Bitcoin's decentralized nature, on the other hand, offered a way out, a path toward a more equitable and resilient financial system. The first Bitcoin was mined in January 2009, a mere 3 months after the publication of Nakamoto's white paper. This marked the birth of a new era, an era where the power of money could be returned to the people. At the heart of Bitcoin's revolutionary potential lies its decentralized nature. Unlike traditional currencies, which are issued and controlled by central banks, Bitcoin operates on a distributed network of computers. This means that no single entity has control over the Bitcoin network. This decentralized architecture gives Bitcoin several key advantages over traditional currencies. First, it makes Bitcoin resistant to censorship and manipulation. No single government or institution can shut down the Bitcoin network or control the supply of Bitcoin. Second, decentralization makes Bitcoin more secure. Transactions are verified and recorded on a public ledger called the blockchain, which is maintained by thousands of computers around the world. This makes it virtually impossible to alter or counterfeit Bitcoin transactions. Third, Bitcoin's decentralized nature makes it accessible to anyone with an internet connection. This is in stark contrast to traditional banking systems, which often exclude billions of people around the world who lack access to traditional financial services. The rise of Bitcoin has been met with a mixture of excitement, skepticism, and outright hostility. Governments and financial institutions around the world have struggled to come to terms with this new form of money that operates outside of their control. Some countries have embraced Bitcoin, recognizing its potential to foster innovation and economic growth. El Salvador, for example, made history in 2021 by becoming the first country to adopt Bitcoin as legal tender. Other countries have taken a more cautious approach, regulating Bitcoin and other cryptocurrencies to address concerns about money laundering and other illicit activities. Still, other countries have outright banned Bitcoin, viewing it as a threat to their monetary sovereignty and financial stability. China, for example, has implemented a series of increasingly strict measures to crack down on Bitcoin trading and mining. This patchwork of regulations and bans has created uncertainty in the Bitcoin market, highlighting the challenges of navigating a new financial landscape that transcends national borders. Section 5. Bitcoin, the investment. While Bitcoin's future as a currency remains uncertain, its emergence as a global asset class is undeniable. Investors around the world have flocked to Bitcoin, drawn by its potential for high returns and its status as a hedge against inflation. Bitcoin's price has been on a roller coaster ride since its inception. After trading for mere cents in its early days, Bitcoin's price soared to nearly $20,000 in late 2017, only to crash back down in the months that followed. Despite this volatility, Bitcoin has consistently trended upwards over the long term. Its limited supply, coupled with growing demand from investors, has fueled a remarkable bull run that has seen Bitcoin's price reach new all-time highs in recent years. This price appreciation has not gone unnoticed by institutional investors. Companies like Tesla, Square, and MicroStrategy have added Bitcoin to their balance sheets, signaling a growing acceptance of Bitcoin as a legitimate asset class. Section 6. Institutional interest, a turning point. The entry of institutional investors into the Bitcoin market marks a significant turning point in Bitcoin's history. For years, Bitcoin was seen as the domain of tech enthusiasts and early adopters. Today it is increasingly being embraced by Wall Street hedge funds and even pension funds. This institutional adoption is driven by a number of factors, including Bitcoin's potential as a hedge against inflation, its growing acceptance as a store of value, and its potential to generate outsized returns. One of the most high-profile proponents of Bitcoin is Elon Musk, the CEO of Tesla and SpaceX. Musk's tweets about Bitcoin have been known to move markets, and his company's investment in Bitcoin has lent further legitimacy to the cryptocurrency. Even former US President Donald Trump has weighed in on Bitcoin, albeit in a more negative light. Trump has expressed skepticism about Bitcoin, calling it a scam and suggesting that it should be regulated very, very high. Despite these mixed signals from policymakers and regulators, institutional interest in Bitcoin continues to grow, suggesting that Bitcoin is here to stay. Section 7. Bitcoin and the future of finance. The emergence of Bitcoin has sparked a debate about the future of money and finance. Will Bitcoin replace traditional currencies? Will it revolutionize the way we bank and transact? Or will it simply coexist alongside existing financial systems? The answers to these questions remain uncertain. Bitcoin's future depends on a complex interplay of technological advancements, regulatory developments, and societal acceptance. Some believe that Bitcoin has the potential to upend the traditional financial system, offering a more efficient, transparent, and equitable alternative to the current system. They envision a future where Bitcoin becomes the world's reserve currency, used for everything from everyday transactions to international settlements. Others are more cautious, arguing that Bitcoin's volatility, scalability limitations, and regulatory uncertainty make it unlikely to replace traditional currencies anytime soon. They see Bitcoin playing a more niche role, perhaps as a store of value similar to gold, or as a digital asset used primarily for online transactions. Section 8. Challenges and opportunities. Despite its growing popularity, Bitcoin still faces a number of challenges. Scalability remains a major concern. The Bitcoin network can only process a limited number of transactions per second, which can lead to congestion and high fees during peak times. Security is another ongoing concern. While the Bitcoin network itself is highly secure, individual users can still be vulnerable to theft or fraud if they do not take proper precautions to secure their Bitcoin. Regulation remains a major hurdle for Bitcoin's widespread adoption. Clear and consistent regulations are needed to address concerns about money laundering, terrorist financing, and other illicit activities, while also fostering innovation and protecting consumers. Despite these challenges, Bitcoin also presents a number of exciting opportunities. Its potential to empower individuals, promote financial inclusion, and foster innovation is undeniable. Bitcoin could revolutionize the way we send and receive money, making cross-border payments faster, cheaper, and more accessible to billions of people around the world. It could also provide a lifeline to people living in countries with hyperinflation or unstable currencies. Section 9. A call to understanding. Bitcoin is more than just a technology. It is a social and economic experiment that has the potential to reshape the world around us. Whether it fulfills this potential remains to be seen. One thing is certain: Bitcoin is a force to be reckoned with. Its impact on the global economy and financial system is only just beginning to be felt. Understanding Bitcoin is no longer optional. It is essential for anyone who wants to be informed about the future of money, finance, and technology. As we stand at the cusp of a new era, it is up to each of us to engage with this technology, to learn about its potential, and to participate in shaping its future.